Do not use MSTY for Bitcoin income. That probably got everybody shitting themselves a little bit. So what I wanted to do is do a video because I was listening to a recording of a Twitter Spaces that I was invited to, but it was like at 1 a.m. Dubai time, so I couldn't make it. But I realized that there is a contingent of people in the Bitcoin space who basically don't understand anything to do with TradFi. And also, there's a contingent of people that are confusing what the product of MSTY is, and also what the product of MSTR is, and how these things sort of fit in to a portfolio, or how they should fit into a portfolio. So I wanted to do just a quick video and just talk about who should not use MSTY to generate income from Bitcoin. Firstly, if you are, so this person that was running the spaces is a professional options trader. If you are a professional options trader, I promise you that you can generate higher returns for yourself selling call options and put options on MSTR. You can do it yourself. How do I know that? Because I did it myself. Before I started talking about it, I, for 3 months, traded myself on call options. Here's what happened. I found myself, based on the fact that I have a 30% withholding tax that I gotta be aware of. That's another thing we'll get to in a second. I found myself doing the actual strategy, because it's a very simple strategy, right? You sell puts, sell calls. On sell puts, get assigned, sell calls, right? Get called away, sell puts, sell, get assigned, sell calls. Very, very simple strategy. Been doing it forever. First got in, caused a shitstorm doing it in gold. Gold bugs didn't like it, and now gold bug Bitcoiners don't like it. So strategy works, has always worked, and will continue to always work as long as there's volatility on the MSTR instrument. But the person hosting this Twitter Spaces and this conversation is a professional trader, right? He probably should not use MSTY because he'll be able to do it much more tax efficiently himself and generate maybe a slightly higher profit than MSTY does in terms of dividends. I traded it myself, and bear in mind I've got a 30% withholding tax, which, by the way, everyone in the entire world has to pay. The determining factor of that is what your jurisdiction and what deal your jurisdiction has with the USA. If you're a US person, then you don't pay a withholding tax because you're going to pay tax on your income from those dividends. If you're in the UK, for example, you're a resident in the UK, that withholding tax is 15% because you're going to be paying some tax on the UK side. So there's a double tax treaty with the US, between the UK and the US. Me being in the UAE, there is no double taxation treaty, so the withholding tax is 30%. Now, bear in mind that, so what does that mean? It means that last month, MSTY's yield was 7.7%. So I got a net 5.4%. So I've traded this myself, and what I realized was that I could probably make, because they use synthetics, I could probably make somewhere around 6.1%, 6%, 6.1%, and I'm getting 5.4% from MSTY. The reason why I decided to go with MSTY is because I don't want the hassle of managing it. I'm not sitting in front of my computer. I've had to do this forever. I don't want to do it anymore. I have to sit in front of my computer all day, watching volatility, watching options prices, ready to take action any time, any moment of any day. And I don't want to do that. It's not worth the 0.6 to 0.8% extra that I could make on a monthly basis for such a small portion of my portfolio, right? So if you are a professional trader and you're sitting in front of your computer like a nerd all day doing this yourself, you probably shouldn't use MSTY because you can do it yourself, right? And you're probably going to end up making a slightly higher return than MSTY is going to pay you. I don't want that hassle. I don't want to do it. I don't want the work. I don't want the hassle of managing an options trade. Then on top of that, if you use a synthetic, so you're actually buying long-term call options and then selling call options against that, which is what and then also using credit spreads, which is what MSTY does, you now have a full-time trading job. I don't want to do that. I've got other things going on in my life. So that professional trader, should not use MSTY because he can generate better returns more tax efficiently himself. Now, second person that shouldn't use MSTY is someone who is probably young and really should be focusing on capital appreciation and growth, right? If you are someone who's young, let's say you're in your 20s and you're accumulating Bitcoin and you've been blessed enough to accumulate a few Bitcoin, or maybe more than a few Bitcoin. You have a job, you have a good job that's paying you really well, and you're not in the portfolio stage of your life, right? Then maybe you shouldn't use MSTY and you should leave that capital in the growth part of your life. By the way, this is the type of conversation that I think needs to happen in the Bitcoin space. It's about getting more mature with what Bitcoin is becoming. The more mature Bitcoin becomes, the more mature you have to become as an investor. That's why I've been trying to ask people to please subscribe to the channel, because this is the message that I think needs to get out there. Subscribe to the channel, help me spank the YouTube algorithm and the X algorithms to get this content out to more people by hitting subscribe, please. Now, that young person probably should be focused on accumulation and growth. So I think that the income part of a portfolio is on a sliding scale, and how important it is for you is dependent on particular questions, right? There's somebody who I spoke to last week who probably needs, 20% in income because of the life conditions, right? So it just really depends on that. But someone who's young, who's focused on growth, probably doesn't need MSTY, right, to generate an income. Who else shouldn't use MSTY? Someone who's already got massive passive income. So let's say you've got, a real estate portfolio that's throwing you off $100,000 a month of free cash flow, $50,000 a month of free cash flow, whatever your lifestyle is and whatever your business needs are, it's throwing you off this return. You probably don't need MSTY to give you an income, and you can just put that into the growth part of your portfolio. The other person that may not want to use MSTY to generate income is someone who, let's say you're looking at, say you got 1.5 Bitcoin, right? So you've been blessed enough to get to 1 Bitcoin, you got 1.5 Bitcoin. You probably are not at the stage of life where it's worthwhile selling some of that Bitcoin. I would say for that person, you need to hold on to that Bitcoin, right? You just got above 1 and you need to hold on to that Bitcoin. I probably don't think that it's the right product for that type of person. Look, at the end of the day, the Bitcoin is the goal, right? The Bitcoin is the goal. Owning enough Bitcoin is the goal. MSTY is a fund that allows you to generate an income based on whatever your passive income model and your overall income streams are. I still believe in income, right? In a massive way. I think that you should have income streams, whether that's a job, a side business, a main business, real estate portfolio that you've already built up. I wouldn't focus on building one now, but you need income as part of a portfolio. So the way that I use MSTY is that either, depending on what I see as the position of the market, I'm either dripping back into MSTY, right? Firstly, I have no more than 10, I'm not even at 10% yet, I'm building up to that, right? Building up to 10% of the portfolio. The other 90% is in complete growth, the growth side. And I'll either drip back the dividend back into MSTY and continue building until it's 10%, or I'll turn off the drip and build a cash pot so that when Bitcoin does a cycle where it is now come down to, let's say, the absolute bullish indicator of them all, which is the 200-week moving average, me as an experienced investor, I can go long in many ways, whether that's long spot Bitcoin, long an ETF, long call options, long MSTR, whatever. I've got that cash sitting there. So basically the portfolio just regenerates cash. The other thing that's very important is that if you think, and you're the type of moron that has thought that MSTY's returns should match MSTR's returns, you probably shouldn't be touching MSTY because you're too stupid at this point, right? You don't understand that an income fund is not going to match the capital appreciation of the underlying asset. It's not meant to. It's not designed to. It's not ever going to, right? I think the safest assumption to make is that MSTY is going to maybe appreciate at 0 to 30%, maybe 40, depending on how they manage those credit spreads, maybe 0 to 30% of MSTR's compound annual growth rate. It should be completely fine if it's 0, right? Because that's an ideal income fund is you put $100,000 in there and they give you your income on a monthly basis, and at the end of the year it stays at 100,000. MSTY is a unique scenario because it's got that growth engine of MSTR, which is powered by the nuclear reactor of Bitcoin, that it may have a compound annual growth rate that's higher than 0%. The NAV erosion thing is interesting, right? It's a bit complicated to explain the NAV erosion thing because really what's going on is that the underlying asset, the synthetic long on the underlying asset is going down, but they're still paying you the premium that they generated. So it looks like there's NAV erosion going on and they're giving you your money back. But what should happen is that as MSTR enters another bull run to the upside, that synthetic long should recapture the value that was lost when they paid you out your premium, right? So it looks like a quote-unquote NAV erosion, but that would be like saying you bought MSTR at 350, it's now sitting at 300, so you've had NAV erosion. It's a misnomer and a misunderstanding of what's going on, right? If you sold right now, you have realized NAV erosion, but if you hold on to it for the long term and you think MSTR is going to go up, then it's not NAV erosion, right? Anyway, whatever, right? So that's another thing. If that's the reality that you're living in, then you probably shouldn't do it. If you're sitting there and you are a gold bug Bitcoiner and you believe that having a cold wallet between your butt cheeks is the safest position to be in because nobody can come and get it from you, then probably don't use MSTY. I'm not gonna get mad at that. MSTY, and also if you're one of these morons that thinks that MSTY is going to take capital from MSTR, you're also moronic. If you imagine, and I've said this many times where I keep saying subscribe to the channel because this is the type of thing that we need to understand now. If you think, or rather, MSTR is a speculative platform that's being developed on Bitcoin. I've said this many times if you've watched any of my videos. MSTR will succeed and is designed to create products or allow products like MSTY to exist. MSTR is the hand, and MSTY is a finger. STRK is a finger. Stripe is a finger. All these other things are features on top of the speculative platform that MSTR is creating for the markets. MSTR has value, and it has a premium value to the underlying Bitcoin because it can be a platform for all these other things. That's what it's being designed for. So MSTY gives MSTR value. If MSTY fails, it would actually put a big black mark on MSTR because what it needs, the market conditions needed for MSTY to fail is that MSTR's volatility completely disappears. And that's not going to happen. If you believe in Bitcoin, MSTR's volatility is not going to disappear, and it should, based on the market value of that speculative platform, always have a higher volatility than Bitcoin, which is why MSTY will have the value that it has, because it is an income fund that's based on MSTR, which is built on the nuclear reactor of Bitcoin, nuclear engine, the growth engine of Bitcoin. So if you have basically understood that, or you think that MSTY should have the same CAGR as the same compound annual growth rate as MSTR, please just step away from the computer. Just give yourself a rest. You probably need a nap, right? You don't understand how TradFi works. You got a little bit of homework to do. If you're in my comments on Twitter and you're telling me, I can't believe you told people to sell Bitcoin to put into MSTY, just take a nap. You don't understand what's going on. You're not sophisticated enough. If you think that MSTY is another BlockFi, Celsius, all this other shit, you're a moron, right? You do not understand the difference between American capital markets, right? The American derivative markets, and BlockFi, or Celsius, which was a VC-backed lending platform, right? These are completely different things. And if you are conflating these two things, just take a nap. That's what you got to do. You got to take a nap. We must insist that these people just take a nap because they don't know what's going on. You're comparing things that you shouldn't be comparing. You don't know what the purpose of these different funds are. So don't do it. Please just stick in Bitcoin. Be a gold bug Bitcoiner. Be happy. It's going to be fine. You're going to win. It's all good. Now, if you are someone that understands portfolio management, you understand the fact that there are different buckets in a portfolio, you understand that income can be used to generate different results for different things and et cetera, then maybe consider using it. But there's so much lack of intelligence in this conversation and the conflations that are going on and everything else that it's worrying me about this conversation. I'm seeing people say that they're dumping their MSTR to buy MSTY. And it's like, you're a fucking moron, right? So don't do this. Just stop. As that Michael Jordan meme is, stop it. Get some help, right? Anyone who's buying MSTY should absolutely understand that it is an income fund designed to leverage and monetize the volatility that MSTR is adding to the market based on the growth engine of Bitcoin that powers it. It is not the ultimate fund. It is part of a portfolio. And by the way, a very small part of a portfolio. It should not be the overwhelming majority of your portfolio. It is a very, very small part of the portfolio. So don't do this if you are one of those people. Because ultimately, there's only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.